All right, everybody. Time to get started. Well, technically we got 1 minute left, but I'm gonna go ahead and start this up and wait for people to join. I'll wait till I either have about five or 10 minutes, or maybe like 15 people join up. I'll get one or the two happens first. That's when I'll really start up. As of now, as you can see, I'm gonna put on futures. There were some bear flag breaks that I'm going to talk about how to set your trend lines for breaks and whatnot. So we're just waiting for some people to join. I see I got 3 of y'all in here. If y'all 3 have any questions while we're waiting, please ask, so that maybe we can get started with you guys while we're waiting for everybody else. Yeah, I'm either gonna get started at 15 people or like 5 or 10 minutes and give everybody a little bit of grace time. So as you can see, making some good money here. Already made about 200, 250, and then got in some more puts. Didn't even need the VWAP really to get into it, because well under the 200-day EMA, flag, broken, another flag, broken. So hey, glad you're here. I know you have some questions, brother. Ask away. I am here for you, okay? So at this point, you know, you can ask your very specific questions, and we can get them answered. So as y'all can see, made some money. I'm gonna just go ahead and cut it. So made my little 300. We'll talk about why I did it in a little bit. If you look up over here at the top, boss, it's gonna be right up here. Oh, I guess it's, or right here. Yeah, it's highlighted on the right side already. But again, I would not play futures until you really understand options already and you're comfortable, okay? If you're not comfortable doing the options, you shouldn't be fucking around with futures, because futures will get you destroyed very quickly, okay? And it's kind of like a evolution thing, right? Like you want to start with stocks, get comfortable making just a 1 to 2% on stocks, and then you kind of want to then say, okay, now I understand how the stock moves. I understand that my my strategy works, blah blah blah. Now I can pivot into options and start making maybe 5 or 10% versus 2%. And so you're still securing small bags, and that's how you can stay consistent, is by securing these small bags, right? But then eventually, once you get really consistent with that, you can start putting $3, $4, $5, $6, $10,000 in futures. Make a quick. You're not, and then at that point, you're not actually looking for percent. You're looking for a dollar amount. So then you say, okay, I want to make 250 every time, right? So you're gonna get 250, 250, 250, 250, and you just make 250. And then if you can make 250 every day, that's like $50,000 a year, right? So something to think about. You just want to be small, consistent wins. That's how you're going to be successful. If you're aiming for 25, 30, 35 up, you're gonna lose a lot more than you win, because you're overreaching, basically. So we got 10 people, 4 minutes in. I'll give everybody about 1 more minute to join in. We usually have consistently about 20 or 30 people in here, so I'm going to assume some more people will join. And I just kind of want to give them a little bit of time if they need it. And then I'm going to start off by talking about these flags on the futures, and then I'm going to start talking about QQQ and how things went throughout the week. We'll go through plays and stuff and answer questions, so just so that y'all can get the repetition and get the examples in, because those are very important for you right now, because the more that you see, the more that you know, the better and more successful you'll be, right? So looks like a couple people left. Cheats. All right, so I'm gonna go ahead and get started. All right, so what is a flag or wedge or whatever? Basically what you want to see, and whether it's going this way or it's going that way, is you're looking for basically a few points where you hit, you drop, and you hit, go up, hit, and you're just looking for that. And then you're going to look for the lowest points, 2 or 3, and you're going to draw a line that connects them, and then you're going to look for the highest points, 2, 3, or more, right? And you're going to basically draw a line that connects them, and they're either going to draw a channel or they're going to end up like this where it's a wedge, okay? Regardless, they're about the same thing. You're just looking for a breakthrough. And so a bear flag or a bear or a falling wedge, sorry, is what it's going to do is it's going to basically go upwards. So as you can see, it's going upwards, it's consolidating up for another drop. And then again here, consolidate up for another drop, consolidate up for another drop. And then once we see another consolidate up, we'll probably get another drop. But basically what it's doing is it's kind of like the spring for the leap, right? So regardless if it's going to do this or if it's doing this for the big pop up, right? It's basically just kind of giving you a channel. You want to draw those trend lines, which if you're on TradingView, you're going to go here, and you can favorite this and your anchored VWAP so that you know which ones you need to use, and you're just going to press trend line and you're going to draw it. So this is how it draws. You click and you draw and you click it. So I'm going to delete that because I don't need that. But basically what happened here, it also happened here, is we had a flag. It went, normally they don't actually really go this long, but this one went for a very long time, and that's because we had bulls fighting bears trying to basically push it back up to the 200-day EMA, and it didn't quite work out. And that's okay because we had our channel, and basically it went up, hit the top, started dropping, tried to hit back up, went down, and then created a double top right here. So this would have been a good entry for this right here. And then again, we try and hit up, but we don't make it. And then we're starting to hit lower lows. And as you can see, this is where we ended. And we started seeing a big drop. And this one candle, look at this one candle right here, is from 12,359 to 1277. That's a massive drop. So I see your question here. How to enter using options with the smaller account. So first of all, with the smaller account, what I recommend first, especially if you are newer, is stop trying to make the money quick. Okay, get the understanding, such as this stuff, the actual strategy. Get the understanding of the strategy, and what you're going to want to do first, start off with, is you're going to want to, and you can write these down, see TQQQ and SQQQ. Let's go ahead and bring these up in mine so that I can have them for easier access. So TQQQ is literally the same as QQQ, and I will show you. So this is TQQQ, and this is QQQ. Nothing changed, right? SQQQ is the actual exact invert of those, both of them, right? And as you can see, they are both cheaper than QQQ. So the reason I say you want to get used to doing shares first, so what I would do is TQQQ, right? In this scenario, you wouldn't be in TQQQ, you would be in SQQQ. You would buy wherever the strategy gives you your points at buying, and all you're trying to do is secure 1 to 2% with a 1 or 2% stop loss at the same time, okay? So that you can get really used to securing small amounts and just understanding how the strategy works and pinpointing your entries and your exits. Once you get good at that, and once you're consistent, you can then play options with these two, okay? Because these two are going to be very cheap. So even 5 days out, 5 to 7 days out, it's still only going to cost you maybe $60, $75, something like that, which is more than affordable. And if you can't afford that, then you have too small of an account. You shouldn't be trying to play options at all. You should be just doing shares and just trying to get consistent and build your money up slowly but surely, okay? If you have something like 200, 250, 500-ish, something like that, then you can start looking at your options, but you only want to do one at a time. And you want to have very, 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 basically, you want to be very disciplined. You want to have a profit stop that's small, and you want to have a stop loss that's small. And if it hits, it hits. You need to be out. Don't be greedy. Don't be saying, oh, I think it can continue to go. It doesn't matter. You just need to be consistent and just keep getting, you know, 1, 1, 1, 1, 1, 1, 1. Wall Street Queen. No. No. Absolutely not. The 1 minute is going to, let me show you something. So let's look at SQQQ. Or actually, let's do the bread and butter. Let's do QQQ. So this was QQQ on Friday, right? As you can see, it's very obvious what it's doing. It's gonna stay down, right? Now let's look at it on the 1 minute. This could have tricked you. This would have been bad. This trend in general was actually pretty solid for the day, so even if it would have gotten you a couple times, you would have made money for the most part. But on a day where it's really, really choppy, I'm trying to look for like this stuff right here, you would have gotten screwed over and over on these crosses back and forth on the 200-day EMA. Whereas on the 7 minute, this is, you know, this is a lot stronger, right? When you cross up, you cross up. When you cross down, you really cross down. And when you really cross up, you know what I'm saying? Yes, greed kills the small account. Do you use the same strike price for your calls and puts for the entire day, or do you adjust them as the market move? I'm adjusting them as the market move. So understand something. Wherever the strike price is, right? So wherever the strike price is, this is 288. I'm going to get within $5 of that. If it's a call, $5 above is the highest I'm going to get. And if it's a put, it's $5 below is the lowest I'm going to get. If it hits 290, $5 above that is the highest I'm going to get, and $5 below that is the lowest I'm going to get. It's all dependent on the actual stock price at the moment when I buy it. Beach bum, I can't agree with that more than anything. Greed will kill your small account. Kill it, because the moment you get greedy is when you start actually being consistent. This is something that you'll notice is you start winning, you start being consistent, and you say, man, maybe I should, instead of putting 20% of my portfolio in each play, I should do 80% in this one play because I know I'm good. You know what I'm saying? I know I'm good. And then lo and behold, you get humbled very quickly, and now you're back down to where you started because you did some shit like that. So that happens to a lot of people. It happened to me a bunch of times. And eventually you start following your rules and you don't let it happen to you anymore. Okay. Do brokers like TD Ameritrade have certain requirements before letting one trade futures? So Thinkorswim is probably not actually going to let you trade futures. You're going to have to do it on TD, and you have to get approved for it. You're going to probably have to call them and let them know you want to trade futures and blah, 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 blah. It's like one of those levels, right? You get level 2 options trading, and then da-da-da, you have to be open up for futures. You have to have a margin account to trade futures, which is why you shouldn't trade futures until you really know what you're doing, because you should have more than $25,000 in your account so that you can have unlimited trading on your margin account, and 2, be very consistent and disciplined in your trades, because as soon as you start trading futures, you're going to get humbled. You're going to get humbled very quickly. Because let me show you something. Where I exited on my little put earlier that I showed y'all, right? This right here. From here, where I exited on futures, from here to here is about $700, bro, that you would have lost if you were still in a put. If you'd have been like, okay, I think the trend's really strong, I'm going to enter my put here. Well, guess what? You'd be fucked. And so if you would have bought a bunch of puts, right, or shorted it, that's really what it is. You don't really get puts on futures. You just short it. You would basically be down thousands and thousands of dollars right now. So do not mess with futures until you really know what you're doing. Until you're not... Let's put it this way. Until you're not looking and trying to learn from other people anymore, you shouldn't be trading futures. Just put it that way. I didn't start trading futures until about a month or 2 ago. And I've been very consistent for a very long time. And I still didn't want to do it. And I still rarely do it. I only do it on Sundays when I'm doing this class with y'all. I start off with a little play and show y'all like, hey, you know, I know what I'm doing and I made a little money, and then boom, I'm done with it and I don't mess with it anymore. Because it's not a good look. You're gonna get hurt really quickly, and even I know that, and I'm good, and I don't want to play them. So that should tell you all you need to know. So again, for those of you that joined a little later, let's look at these flags. So bear flag. A bear flag is basically a consolidation upwards in a channel where you have several high points that line up and several low points that line up, that you can create a trend line on both and create a channel. And what you're looking for is the break below that channel to signal you to get in. So the moment this broke below, you would have gotten puts, sold probably on this exact same candle somewhere in here, 15%, 10-15%, waited for another entry, which would have been offered here. As you see, you break out, break below. Literally this candle or this candle, you're already out because that's 10 or 15%. Then you have another flag that forms here that you draw your lines for. You can use this bottom one as your top. I actually did it a little bit because I wasn't so zoomed in. And then once it breaks below, which was the very first candle for today, this was the very first candle of today, got in puts. I actually made about $200-300 on this first little candle, and then I waited and I just got in again here here just because whatever, and I made another $200-300. So futures are basically your it's literally like the market, like it's like NASDAQ. This is NASDAQ futures. So this is basically showing you what the market is doing before it kind of does it. I mean, they're called futures because it literally shows you where the market's going. So overall, so this NASDAQ futures, right? This is showing us that tomorrow we can probably expect and get just immediately, more than likely, puts in QQQ and watch it just die through the FOMC meeting, basically. You see what I'm saying? So you can look at futures. There's several things you can look at to help you understand where QQQ is going, such as you can look at futures, you can look at VXN or VIX, because as VIX goes up, QQQ goes down, or Vixen, they're both the same thing basically. And as it goes down, QQQ goes up. So as you can see here, we're in a bull flag, right? This is a flag that's going to break that way back up. And once it breaks back up, QQQ is going to drop. So I'm going to guess that we're going to get below 280 here very soon, probably this week. Yeah. Oh, I see Logan's in here. Logan, how do I get you on part of the stream if you would like to? Pop in here. I see you. I'm not sure how to link you in. Let me know when you figure it out, because I'm going to continue doing this stuff. So, as I was saying, so look, what we're doing here, let's look at Friday for QQQ with the strategy, right? Well below the 200-day EMA. And we open up below VWAP, signaling your puts. Obviously, we have a couple moments where we flare up, which maybe would have stopped you out, and maybe you would have gotten out. But we don't trade the first like 30 minutes or so of the day anyway. So these first few candles that tricked you, you wouldn't even have gotten in. You would have seen probably this candle right here would have been the one you got in, or this one right here. Strong trend down. We're good. You would have made your, anywhere between 5 and 20% on these next few candles. Waited, seen this, seen it tap the VWAP, seen it go above VWAP a couple times. Maybe you could have definitely scalped calls if you would have got in here, averaged down, or even gotten out and then got back in on one of these. You definitely could have scalped calls for 15-ish% right there. Back down. We're waiting for a strong candle down. None of these candles, honestly, were strong upwards, so I didn't get in any calls on this. Even though it broke, take a look. We had a candle right here where it was above and below. This candle is actually pretty weak. And then we have a weak candle right here, like a super weak candle signaling we're going to break back down. None of these were strong enough to show me that I want to get in. We break down. This candle is strong. So I would get inputs on this candle, ride them out, and then basically that's the end of the day. So now let's look at the day before. Uh-oh. Fucked up there. Let's get back here. Okay, so this is the day before. As you can see, we have this double pressure on the 200-day EMA and VWAP, so we can't, it's going to be very hard to break up and go through, right? So this, if you were going to get in calls, which I didn't because I didn't trust any of this, what you would do is you would get in understanding that you're going to get out right at the 200-day EMA. And you're going to probably get in puts expecting that bounce. And what you're going to do is you're going to get inputs on either this candle, you would get in, see this bounce, maybe even get back in calls, get out, get inputs right after this candle, which is weak and bouncing off. So this candle, get out at the VWAP, expecting a bounce potentially, break below, get back in puts, get out on this candle, see this. Now there's two things happening here. So we're bouncing off of VWAP, and since we're going up, you have all these weak ass candles and then a weak candle off of the bounce, signaling let's get back in puts, there. Anywhere in this area you'd get out with your 5 to 15%. Again, we have this double pressure. There's no way we want to get in calls. No way we want to get in calls. Waiting for that bounce, see that weak candle, tweezer tops. If you don't know what tweezer tops are, basically they are going to be two candles that are almost the same body height with 2 wicks on top. They're damn near the same, especially when you're looking at it like this. Those look like tweezer tops. Then you see this weak candle showing you more death, right? Let's go ahead and get in puts on this candle, because this candle is above and below. We don't want that. This candle's strong below, and that's the end. That's it. It basically dies for the rest of the day. You would be out anywhere in here already, and you could have drawn, as we talked about bear flags, drawn your little range here, watched it break through and got in more puts, and then been out somewhere in here again, and that would have been it for the day. Let's see. Oh, yes. So the time frame, understand this, guys. The time frame does not necessarily matter as long as you're above like the 3-minute time frame. You're using 5 minutes or above. It's a preference thing. Okay. So I'm going to use, you can use the 5-minute, you can use the 7-minute, you can use 13, you can use 15. It's up to you on your trading style. If you're going to be trading day trading, I'd recommend the 5, 7, or 13. Maybe the 15 as well, depending on how long you want to hold them for. And then anything higher than that is going to be basically, you're probably going to try and swing it. That's it. But it's based off of your trading preferences. So stop focusing on the time frame. As long as you're not using 1 or 3-minute time frames, you're good. The 7-minute is very minimally different than the 5-minute, right? The 7-minute and 5-minute are literally just small difference. I will use the body of the candles. So unless it makes it look, and let me show you what I mean. So as you can see, unless it makes the channel look more consistent to do it on the wick, basically I might not even be consistently trying to use the wick or the candle. I'm just like, hey, look, this is the general area, right? This is the general area. This is the bottom of that. This is the bottom of that. It doesn't necessarily need to be exactly on the bottom of that wick or you know what I'm saying? I'm just drawing it for general sake, and I'm looking for a break of that area. And once I see a strongish break, so like I'm not even going to get in, right? I'm not going to get in right on the break. I'm going to get in somewhere right here, because this is a strong enough break where it doesn't matter if I needed to draw it down here on the wicks, or I needed to draw it up here on the candle. That's a strong enough break where we're good. It's confirmed. You see what I'm saying? And vice versa here, right? I wouldn't get in right on a break, and I wouldn't even get in here. I wouldn't get in until I broke the 200-day EMA and saw that it was strong above the 200-day EMA. For the simple fact that that's a gravitational zone, right? So we could break above, and we could see this. We could see that could happen, and it does happen. So you would want to see something stronger, right? If we did break up, but in the sense that we broke down, there's no resistance coming down here. There's no VWAP, there's no 200-day EMA. The only thing that you would have as resistance is if you use like the fibs, right? So if you use fibs, you would do something like, oh, and Logan's probably gonna kill me for this. High to low. So let's say something like that. High and a low. You find a high and a low on the chart, and you go, okay, look, these are your golden zone to get inputs, right? So what you're looking for is every time you hit one of these lines, all it means is that you're hitting kind of a resistance zone. So look at this. Look how perfectly it also matches up with the bounces. Boom, 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 right? There's a reason for that. Breaks above barely, gets in these gets in the golden zone for puts, and then look at this. This is because this fibs is one thing that you know, hedge funds and all that, they use. And then look again. Look again. It has an extension zone. We hit the bottom of our golden zone, so we get in our golden put zone again. Hits the bottom, bounces. We re-enter our golden put zone and then break the fuck down again. You know what I mean? Oh, on TradingView, you're going to go, so your anchored VWAP is here, right? Your fib is right underneath. Fib retracement. And the way you draw, so for puts, if you're looking for a put entrance zone, you're going to draw from a high to a low. And understand, and Logan will tell you that I'm right here if he's in. Basically, the longer the distance, so the longer out you go, the more basically time it's probably going to take to hit your zone. But see, the less time I have in here, the easier, you know, the quicker it hit my zone. Boom, we got in here, died. Got in here, died. Hit it again, died, right? So it's all about, you just need to find a high and a low, and you draw from the high to the low for puts, and vice versa. If you're going to do a call zone, you're going to do from the bottom to the high. And as you can see, we have a really hard time entering the call zone and never really do, and that's why we don't ever run up. We actually are in the put zones. So that's how you do the fibs. Yes, bro. I tried to tell you in the Discord, Logan. Logan is good vibes trading in the chat, by the way, guys. He's my partner in the Discord, and he's the one who helps me teach people and everything like that. So he's the one who really does the fibs and stuff. But I tried to tell him to get in some puts or short futures, man. And I don't think he was around, but that would have been some money for you, brother. Let's see, how do I find futures? What are the symbols? Again, 007. Do not fuck with futures until you're consistent. I did not start playing futures until a month or two ago. So you can find futures, for example, here, right? You could just type futures and then just look through them and pick the ones that you're interested in. Okay. It's up to you. But that's how you do it on here. You just go to the plus sign, and instead of stocks or forex or crypto or whatever, you put it on futures. Logan, do you know how to get you in on here potentially? I'm not sure how I could do that. Does anyone have any questions? So I want to make sure I've gone over excuse me. I've gone over a good amount of, you know, the VWAP and the 200-day strategy. If y'all want to look at let me see if I can find some good examples of some inside candles. So like this potentially looks like oh no. Yeah, this is not, I don't want to do any inside candles right now. None of these suck. Yeah. And don't get me wrong. You should definitely look at futures. Like, if you remember how I talk about on TikTok and everything, one of the things you need to do is you need to pick an industry that you're interested in, right? And from there, you can then pick the futures for that industry, and then you can pick the volatility index for that industry, and you can start using them to help you. Futures can trade basically 24/7, and the only day that I think they're off is from like Friday close to Sunday at 5 p.m. Central. That's when they open back up. So there's one day, one period of 24 hours or whatever, or a little over 24 hours where they don't trade, but then they trade all other times. So let me see. Would love more training on choosing the right option, especially Greeks. So in terms of the option, right? Rule of thumb, without even looking at Greeks, rule of thumb. If you're day trading, 7 days out. Okay? If you're day trading, get it 7 days out. So if today is Monday, you need to get it for next Monday. If it's Wednesday, you need to get it for next Wednesday. If it's Tuesday, get it for next Wednesday. Okay? Give yourself at least 7 days. Okay? Then from there, just pick what you can afford within $5 of that strike price. And again, whatever you can afford. The closer that you can get to the current strike price, the better. So, simplified way to look at your options and picking. If you know what you want, like the strategy told you, get in puts or get in calls, right? Rule of thumb, quick way to get in and pick something. Give yourself 7 days or more, and then pick within $5, whatever you can afford within $5 of that strike. And that's it. And then set your sell order for 5 or 10%, hit it, and be out. That's how you're going to do it. If it's going to be something that you want to swing, give yourself, depending on how long you want to swing, right? Just give yourself an extra 2 weeks past the day. Like, say I want to swing it through July 4th. Well, I'm going to get my option for maybe July 26th or something like that, right? Like, I'm going to give myself a couple more weeks time period just in case, one, I don't want theta to hurt my option contract. So the more time I get, the better I get, because I'm trying to swing it for a while, right? And then two, say it keeps going in my favor, or it takes a second to go in my favor and I have to average down a couple times. Well, that at least I know that I have extra time to get to where I want to go, and I still believe in it, right? So let's see. So if we wanted to play shares on daily time frame, we would set VWAP on the first of month, then play entries and say 15 chart and hits off that VWAP. So that beach bum, to answer your question, that's dependent on how you're doing the shares. Okay, so if you're doing, your daily time frame, you can do it on the 7-minute, 13-minute, 15-minute. It doesn't matter. And if you want to trade them over several days, I would say then you can do it. You set it for the first of the month and then just let it do its thing. But if you're trying to day trade for 1 or 2% a day, okay, on the shares that you're doing, then you're gonna do it on the opening candle for the day. You're gonna put your VWAP on the opening candle for the day, and you're just basically looking. And what I would say, to be honest with you, is really shoot for 0.5% to 1%, and you'll be successful. Consistently use about half your, like 30 to 45% of your portfolio on those shares if you're doing TQQQ and SQQQ and the strategy tells you to get in and it's a strong move, and you make your 5%, or I'm sorry, your 0.5% or 1%, and you'll be good to go. You do that twice in one day, right? And then lo and behold, you've made 1 or 2%. You basically made 0.5 to 1% on your entire portfolio on the day. And that's how you can continually grow your portfolio a consistent amount. Let's see. I answered Soccer Dude. Chart Amazon on 13-minute. Let's look at Amazon on the 13-minute. So it looks very similar to like QQQ right? Speaking of which, let me just gonna go ahead and delete these for Monday. So Amazon, right, was one of the things that was holding up QQQ to begin with, right? So that's going to be one reason why they're so similar. But we're just in another flag. We're probably going to go down to $100. I have my strategic buying points. I bought at I think like 127. Then I bought again at 110. I'm going to buy again at 105 or 100. And then I'm going to buy basically every $2 or $3 that it goes under 100. I'm just going to buy more shares. Amazon is going to be one of my retirement type things that I'm going to do. Yeah, monthly VWAP is dope. I do like the monthly VWAP, by the way. How would I set a stop for for profit with an option? So you're saying I want to get LM, by the way. No, I'm saying even if you do it all, if you trade all the time, okay? Even if you trade all the time, guys, you should be looking for 5 or 10% on your on your trades. You should not be like 5 or 10% is what I'm trying to get, right? And if you're looking for more than that, it's potentially going to turn around on you. So the less amount, the smaller amount that you're trying to accept, the more consistent you'll be, because you'll basically just say, hey, look, I'm going to sell it, and it'll move in your direction because your strategy is good, right? So if your strategy is good and it tells you go ahead and get in puts or go ahead and get in calls, the stock will usually continue in that direction for at least 5% or 10%, and then you'll go. And when I say 5 or 10%, I mean in 5% in the sense that it's an options trade, or 10% in the sense that it's an options trade. And give an example how I would set a profit stop for an option. Basically, say I buy it for $100. Immediately, I'm going to go to that option that I just bought. So on my home screen, and I see, hey, look, it's worth $100, or it's worth $105. I don't care how much it's worth. I'm going to press sell, and I'm going to put a limit sell for $105 or $110, 5 or 10%, and I'm selling it. 15 or 20%, you can do 15 or 20%, but just understand it's going to be less consistent. That's all. I like to do 5 or 10 to be more consistent. That's all. You can do 50. It's up to you, right? So just understand, the higher you go, the less consistent you will be, because it has the potential to turn around on you. So for me, in a market like this where we can't trust anything, I would much rather accept 5 or 10% than look for 15 or 20% and have it turn around on me and then be down 15 or 20% when I could have accepted 5 or 10. And so in a really volatile market like now, I'd much rather just accept 5 or 10%. So before, when it was a strong market, strong upward or super strong downward, I was absolutely doing 15, 20%, no doubt. And on that note, if I buy 10 options contracts, I'm going to sell 8 of them at 5 or 10%, and the other 2 will be at 15 or 20%. So I'm still securing, where I can. And then if it starts dropping, what I'm going to do is I'm going to sell those last 2 at either 5% or even, depending on where I sold the original 8. Does that make sense? So once it goes down 5%, I'm just going to let it go. And I see what you were talking about, Logan, that we actually have, it looks like 2 inside candles back to back, 3 inside candles back to back on the futures right now. On that. And this was all after hours, so let's look at during the hours. This is an inside candle right here that we ended on for the day. So what I'm gonna guess, just for Amazon, is as soon as we break below this inside candle range right here, it's gonna it's going to be dirty. It's probably going to go down to like 105-ish. Does anyone else have any questions? Been going for about 45 minutes now. I want to make sure everybody has their questions answered, no matter what they are. Don't think that anything is silly or goofy or anything like that. I want to answer any and everything that you have. As well as if you want me to just look at something or like look at a particular stock or anything like that. My active trading setup. I'm legitimate. Like what I show y'all on on TikTok and stuff, that's what I'm doing. I just anchor my VWAP. Get on here. I literally just anchor my VWAP and I'm looking at it and I'm just doing my entries and my exits based off of the VWAP and the 200-day EMA. And then if I see a pattern such as this, which is an obvious bear flag, right? Because it's just channeling plus resistance, I'm going to go ahead and use the trend break for my entry, right? And then if there's an inside candle break, I might use that for a quick scalp. But this is what I'm doing. Gold going to do. So my, I don't play gold very much. I actually own some, like physical, but I don't like play the stocks very often. But I'm going to go ahead and say, just based off of what's going on in the world right now, commodities, gold, etc., are going to go up until all this bullshit is over. Okay, so investing in like shares of oil, wheat, corn, certain like grocery stores and stuff, things that you know are going up for you right now, is going to go up in the stock market as well. So IWM also looks like it's flagging. It looks like it tried to form a type of cup and handle and absolutely failed. And then it formed a lower low, lower high, and it's looking to, basically it broke through that channel that it had, so it should start going down some more. Let's see. So I get you want to see how fast you can scalp. So understand you can. I know you talked about the 1 minute and I kind of shit on it earlier. You can use it. You can use it if you really, really, really want to. Do I recommend it? Absolutely not. But you can. And look, you can use it for very, very quick scalps, right? You can use it for extremely quick scalps. But other than that, you probably do not want to, like, when I say quick scalps, I mean like you're getting in something and getting out, like the moment it turns green, you're just selling it. That's the type of stuff that the 1 minute's on. WTI futures. What's WTI? Not sure what that is. As a beginner for options trading, what stocks or indexed do I recommend trading options on? So first, if you're new to trading in general, as I said earlier, don't trade options first. Just trade TQQQ. Let me get back on this. Just trade TQQQ, because TQQQ is QQQ just cheaper, okay? You're going to trade TQQQ and you're going to trade SQQQ shares. And all you're looking for is you're just trying to get good with the strategy and secure like 0.5%. Every time you trade, you're just trying to make 0.5% on your trade. 0.5% is not a lot. It's not meant to be a lot. It's meant to make you consistent. Okay? You're gonna trade these for 0.5% or only lose 0.5%, and that's fine. All right? And then what you're gonna do is once you get consistent, you can then go and trade QQQ, TQQQ, and SQQQ options. And the reason I recommend trading them is just because these are what I know and these are what the strategy works on. So SPY, tech stocks in general, I know it works on. It works on plenty of others, but I don't play other stuff. So I'm not going to tell you how to play football if I play baseball. You know what I'm saying? That's just transparent as I can be on it. I'm not going to tell you to do something I don't know how to do or trade stocks that I don't trade, which is why if WTI is crude, I don't really trade oil, so I wouldn't know, but let's take a look. It is. So we can take a look, see what it's, so just based off of the look of this is just a super strong trend upwards. We're just gonna keep doing this. It's gonna do it all the way up to like $200, bro. We're gonna see $200 a barrel by like August or some shit. This is stupid. I didn't even have to look at this to tell you that, to be honest with you. Oil is gonna just keep going up. There's no reason for it to not keep going up. So do I play Tesla? Yes, I play Tesla. Not often, but it is like a tech type stock. So I do play Tesla from time to time, which is why it is on the top of my list. Because if I'm gonna day trade something, as you can see here, I actually drew something and ended up making a shit ton of money. So yeah, I definitely play Tesla. Tesla is one of those ones, though, that is just like futures. It's either going to make you a lot of money or lose you a lot of money. And so you need to be very certain in the play that you're in and have very tight profit and very tight stop loss, in my opinion. Does anyone have any more questions? Does anyone want me to look at anything else? If I skipped any questions, please just ask again. I kind of got an influx of questions and I might have accidentally skipped over it. So SPX is basically SPY, so we can just look at SPY. Which again is basically just the same thing as NASDAQ and QQQ, right? Because they're all intimately related. So I'm going to go out on a limb and say that SPX is just going to do the same thing. It's just going to go down. Because it's just, I mean, look, guys, record high inflation in the middle of a recession that our presidency and the Fed is literally just like, it's not happening, but we all know it's happening. And then we don't have any policies in place for like oil when we literally have more oil than any other nation in the world, but we haven't built a refinery since the 70s. We don't have any type of like reserve. You know what I mean? It's just like they could at least, if they were gonna keep it privatized, unlike, you know, every other major oil producing country in the world. We're the only one that has it privatized. If we were going to do that, we could at least get 15% tax where they have to, 15% of whatever they pump has to go to the oil for a reserve for times like this, or so that the government can then sell that oil like internationally and then use that money for, I don't know, infrastructure or, you know, getting Flint maybe some water, some clean water or something. That would be pretty cool. But yeah, did the chat die or something? I'm not sure. Was I just talking to myself for a little bit? What was the last thing you heard? Might have lost internet connection for a moment. If I did, I apologize. Whatever I said. Okay, cool. Don't worry if you're asking a question that I've gone over already. So join the stream late. Don't worry about that. Last week's stream, it was mentioned that the lines changes on the chart depending if you have extended on or off. Yes, so understand that extended means that we're seeing what happens after hours, and it's taken into account the overall movement of the stock, right? So if we go ahead and put it on regular hours, it's that 200-day EMA is now it's not a whole bunch different, right? Because overall trend is so down that it doesn't look so different, but in an overall sense, if you were to look back in other spots, it's in a totally different spot. Like somewhere here, maybe it might be up here on extended hours or down here on extended hours. And that's just because you're not taking into account the other candles. Like it's opening way up here or way down here. And so this has to adjust over the years and over months or whatever, where it is located based off of where those candles are now at. You see what I'm saying? So once you put extended on, now it shows every single candle on the entire chart. It's going to adjust because it's a moving average, right? It's an average of the stock moving. So it has to adjust now that there's more data. Does that make sense? And on that note, I lost my train of thought, sorry. Let me see. I'm going to get it back in just a second. Oh, when you should be turning it off and on throughout the day to see if there's a different spot, because if there is, it will still act as a resistance zone or bounce zone for you. So it's very good to still know. Is there any more questions? And you're very welcome. This is why we do this, because I know that you guys have questions that are very simple to answer. You just kind of need to see it and hear it. Oh, I did skip that question. Good. Thank you for responding back. So first I will talk about what I think my bottom is for QQQ, and then I will talk about where I think the bottom is for SPY, because it's going to be relevant in the sense that it's going to be kind of in the same drop amount. So I think that the lowest that we're going to probably see for QQQ is somewhere either 260 to 270, like 3 maybe. I think anywhere in this range it has a potential to bounce back. Now, bare minimum, like if this ends up going worse than the 2008 crash, we're seeing 250. If we see 250, that's probably bare minimum. We got to go up from there. So, with that being said, where do I think SPY is going? I think SPY is probably going to about 270. I think anywhere from 270 to like 275 is a good bottom. Bare bottom though, probably again 350. The 50s tend to be very strong, like mental bounce zones. So people will just start buying the shit out of it at that zone, right? And it'll bounce it back up, and then even if we die back down again, it'll then bounce back up there. And if you look, so let's take a moment to look at this the entire time. So we're gonna go and look back at 2008. So what happens is we die really hard through all the way. We start in the start of at basically the end of 07, we see a dead cat bounce right here, which was actually pretty good considering what was happening. This was a good bounce. And then the death, right? And then we bounce and then we recover. Now let's look here. We're due soon some more death and then a slight bounce. Just like this, we're probably going to get a slight bounce. And then from there, we'll start recovering. And then it'll start seeing new highs, et cetera, et cetera. So if you're a long-term trader, right? If you're a long, just like Warren Buffett type style trader, what you should be doing is every time you see something like this happening, you should just be buying more. And then when it drops, you should just be buying more. Because SPY, S&P, SPX, QQQ, right? In general, they just go up. Yeah, they have years or whatever where they do this. This happens. But imagine buying here at $100, selling here at $20, $30, and then 15 years later, you're back even. You didn't need to sell that. Or just waiting 20 years and you would have doubled or tripled your money if you would have just held. You know what I mean? You're a long-term trader. If you're going to buy shares, hold the damn things. And I agree with Jest. If QQQ drops below 260, it's gonna quickly hit 250. And if it drops below 250, we're literally fucked. As a country, we're fucked. We're gonna get it. We're not just seeing a recession. We're seeing a depression. And a lot of y'all at that point can stop worrying about stocks because you're not even going to be able to trade them. You won't have a job, etc. It's going to be bad. Okay? I will be worried. All right? So understand that if we start hitting these super lows, we're going to be fucked in that sense. Now, if you have the money built up, though, this is the cool part. If you have the money built up and you're prepared for it, you can then buy puts and make all this money down. So say for example, we did get below 250 and then we dropped all the way to 200. If we dropped like the real point where we would have to drop to would probably be somewhere right here, because this is where we started really going hard upwards. So 200-ish right here. We dropped to 200, you would get $50 more of puts in. Flip that into calls, long-term calls, 2 years out for $300, right? $300 strike. Within those 2 years, because look what happens whenever we die. So we died, it took 1 year to die, 1 full year to die, and then in a year, we were back to where we died from. So, in this case, wherever we die to the bottom to, in 1 year, we'll be back here. So that's one thing you need to understand. Is there's two ways you can make a shit ton of money during a recession. You can play the way down, or you can position your way on the way up, separate, or you can play down and up. But you have to understand two things. You're never going to catch the very bottom, and you're never going to catch the very top. Your goal is to make that chunk. So like, just like when you go to practice at a shooting range, right? You're not aiming for the head and you're not aiming for the feet. You're aiming for the torso. That's what you're looking for here. You're not looking for this. You're not looking to get in here. You're looking to get in here. And you're not looking to exit here. You're looking to exit somewhere here. And you're not looking to get in your calls at the very bottom. You're looking to get in on the slight recover up and then ride it back to around here and be out. You get what I'm saying? Feel free to ask the question on TQQQ and SQQQ. I'm gonna do this for probably about 10-ish more minutes. So ask your questions, guys. Any and everything. Okay, so Gonzulab, question, is your position of QQQ in your 401k, how long have you had that position? And what kind of, is it a share position is my question? Gonzo. Okay. Is it a share position though? Are you in some type of calls or puts or whatever, or are you in shares of QQQ? Okay, so if you're in shares, then what I would do for the time being is I would flip those shares into SQQQ shares. Reason being is because, and understand this, I'm not a wizard, so I might not be I might not be right on this. Okay. But what we're all expecting is more death, right? So QQQ should die more, right? So take a look. QQQ and TQQQ basically have the same chart, but TQQQ was started a little later, and it's a little more pronounced in the sense that it is stronger. Like it's going to be more exaggerated. Well, SQQQ is the exact inverse of TQQQ. Okay. So as you can see, as TQQQ did all this rising, SQQQ did a lot of dying, right? Well, in the time being, because look how high this shit started up at. This is hundreds of thousands of dollars per share. Got to understand. And the reason is because it's a triple leveraged inverse of QQQ. Okay, so now we have to zoom like this. So this was what happened during the last kind of recession we had in 2018. I don't want to call it a full recession, but with that being said, what we can expect is to see SQQQ probably go somewhere upwards of about $70 a share here, 65 maybe. With that on your mind, you could flip these into, yes, SQQ is decayed, so it won't hold the value very well. So this is tough, actually. Fuck. Yeah, this is something you're not gonna. If you're willing, if you can watch and set your orders in and flip it back and forth, then yes, this is a good one for you. Basically, what you're going to do is you're going to buy your SQQQ shares, flip them for 2%, wait, get in again, flip them for 2%, and continue to do that. Now, the example that I had for, let's do this real quick. Okay, so the example I was having about flipping back and forth, though, day trading, if you have the time to day trade, this is what you're going to do. So I may have been a little overzealous with the 2 or 3%. Okay, so let's adjust that to about 1%. All right, especially during a market like now, where it's very volatile. We're going to do 1%. Okay, and what you're going to do is basically whenever this is going up, you'll be in this. You'll be in TQQQ, right? And then when it starts going down, you flip into SQQQ, right? So look here. You see where this is? This is where we just were. So this is when you were in TQQQ shares, and this is when you got in SQQQ shares. And then you might have flipped back here to TQQQ, and then on the bounce off the 200-day EMA, you got back in SQQQ, and this right here is about 1%. And this right here is about 1%. And then this flag break is 1-ish%, and so on. So you're just trying to flip back and forth very quickly. But yes, Logan had a very good point. I wasn't thinking about that. SQQQ is time decayed, as is TQQQ. So you're not going to want to hold them long term. Those shares you're not going to want to do long term. You're going to want to like trade them within like a couple days. You want to be out of them. Uh-oh. Got disconnected. Yes, the TQQQ, SQQQ strat is perfect for beginners. And the reason why is because it's going to make you consistent with being patient and taking taking very small gains is going to make you a so much better trader. So much better trader. If you get comfortable taking really small gains, when you do get into doing options trades, that 5 or 10% that I talk about is going to feel like gold, like you just hit the jackpot, because you're used to taking 0.5% or 1%. So 5% on a trade is like, wow. 10%, wow, right? You're not looking for 20%. You're not looking for 30%. And when it does happen on your runners, you're ecstatic. You're never looking for those 100% gains. And the reason why most traders, especially day traders, end up giving all their money to hedge funds and market makers is because they are looking for big money gains. If you stick with 5-10%, you will start taking their money. You'll start taking, your cousin's money, the dude who runs his business's money, all that stuff. Oh, you're doing it on a longer time. Okay, so question, Gonzo. Are you trying to day trade or are you trying to swing trade? Because everything you just named is swing trading. For me, all swing trading. If you're trying to day trade and you're trying to do them quick, those are way too long time frames. So if you're swinging, those time frames, yes, great. If you're day trading, you need to have it on the 1 day, as you see down here, 7 minute, 5 minute, 13 minute, one of those. And that's it. So just know, Gonzo, with your 401k, if you have a time to day trade or whatever, you can day trade with your 401k and not get hit on it as long as you don't pull the money out, right? And what I would actually recommend with your 401k, because this is what I do with mine. So not so much what I recommend, but let me just tell you what I do with mine. Instead of looking for like trying to get into like good opportune shares now, look for later, because your 401k is for 10, 20 years from now, right? So remember how I was talking about QQQ always goes way higher. SPY always goes way higher after this death. So what you should really be doing is probably adding more instead of selling those shares now while they're down. You should probably be just buying more. And then have a piece of your portfolio, say about 25% of your portfolio, dedicated directly to dividend stocks, which if you need a list of dividend stocks, I will post them in here for you. I have a lot. I'll post them in here for you. dividend stocks, and then check on your portfolio once a month, and you'll notice that sometimes there will be sometimes when you get paid out, you could use that money to then buy more shares of those dividend stocks to pay you more money. And you're just looking for something that pays you, money every quarter or every month or every year or every 6 months or whatever. So that's what I would do with my 401k, because that is what I'm doing with my 401k. And that's so you don't have to be on it all the time, right? Like, you don't want to be constantly looking at it. You don't want to be stuck on it. Corey, there's actually a dividend stock channel in the Discord under my name. If you look at it, that is where I was going to pull those from. So Gonzo, don't let this hurt your spirit. I understand that sucks. Trust me, I do. I not telling you it doesn't, because it does. But what I would do, because you're gonna feel really shitty if in 5 years we're over 400 again, right? The 401k, like you said, the long term set and forget. And it's okay to be defensive, and the defensive part is the dividends. That's the defense and offense in one, because it's helping you hold your portfolio, like let it build itself without you doing too much. And then those shares that you buy that you might be down on now will be your retirement fund later. Because short term, yeah, they're down, but again, let's look at this, right? Let's look at this. Every single dip, rally. Every single dip, rally. Dip, rally, dip, rally, dip, rally, dip, rally, dip, rally, dip, rally, dip. We're going to rally eventually. And once this is all said and done, this 200-day EMA, so by the time we probably hit it, is going to be right around here, like I said, at around 250. That's going to be the back up here. And then when we're back at 400, you're going to be like, I'm so glad I didn't sell those for a loss at 220 or 250 or whatever it is, right? You're going to be very, very happy that you didn't, because we're going to recover. And let's put it this way. If we don't recover, this is going to be the least of your worries, because if we don't recover, the economy is so bad and everything is so bad that we're probably like a third world country at that point. And I'm not exaggerating. Because if QQQ can't come up, because tech is what drives a lot of our economy at this point. So if tech can't come back up, we're done. Even oil couldn't do us right. So understand that if QQQ can't bounce back, we're done anyway. That's akin to like World War III basically happening. That's probably what would be happening if we wouldn't be able to recover. So just know that while it does suck now, in 5 or 10 years you'll be okay. And what I would do is, as you make some money or as you can add in, I would just try and average down on those shares and try and get my share average as low as I could, so that when it does bounce back and it gets back to that 400 range and then plus, you're even in a better place than where you were when you initially bought it. So, I think you said you had about 400 and or so, 420 something shares, 425 shares. Try and slowly build that to maybe 600 shares, slowly but surely, if you can, during this. You're always doing limits. Do not do market, Wall Street Queen. If you're doing a market order, you're going to get, fucked royally. Absolutely. If you're buying at market, you're going to buy it for the highest someone has it selling for. If you're selling it at market, you're going to sell it for the lowest someone's trying to buy it for. Basically, market is, I really want this, or I really want to get rid of it. And what the system then goes is, well, someone really wants to buy it, but they only want to buy it for $10. guess what? You're going to sell it for $10 even though it's worth $80. They don't care because that's what that person wants to buy it for. And so it's going to just sell it. If you want to buy something and it's worth $80 and you just put it at market, well, if somebody has a sell order in for $130, guess what you're buying it for? $130. You're already in the hole. That thing is going to have to go 30-40% just for you to get even. So do not do market. Do limit, and then set the limit at the price that you saw it at. So in the options chain, when it says, oh, it's worth this much, you just put limit, you put it at that much, or you put it one above or one below or whatever, and there you go. Wait for it to go. And Gonzo, that is definitely not a bad idea. Liquidating some of your positions. I don't know what you have, but like what I would do is, if you have a bunch of tech stocks or whatever, is I would probably liquidate all my tech except for like QQQ and SPY and maybe Tesla, because Tesla and Amazon and Google, those ones should, because of the split, should be very good ones. Yes, this is recorded. And those will kind of, something that a lot of people don't know is that when you see a company, a big company, a lot of them doing stock splits, massive sign of recession. Something, we're done. So if you see, and as we do see, we have Amazon, Google, Shopify, and now Tesla doing stock splits. That is not good, because that's further showing that not only are we in a recession, we might actually be going towards a depression. And the reason they do that is because they want their stocks to be more affordable for people like you and me, so that when we can't afford $1,000 share price, we can definitely afford, maybe $70, $60, $100, right? And on the flip side, if I need money and I have shares of Amazon, right? When I sell a share of Amazon now, it's only $100. When I sold it before, it was $3,000. That's a big hit to their company if I have to sell a few shares, right? In this case, I sell exactly how much I need for whatever I want. So it helps them retain some value. And then also those shares end up getting bought by people who say, well, this is a really good price. I should just buy some for later. And it helps them retain that price and go above. So let's see. So like those shares, what I was saying is that you're going to probably want to hold on to stocks like those, or maybe even make those some of the ones that you're building for your long-term goal, like for your long-term retirement. Start actually buying shares in those now, or wait till they do the stock split, and then like Amazon, right? It's dying now. You can start buying shares. Same thing when Google does theirs on the 26th. They'll initially go up and then start dying. And then once they start dying, you can just buy shares and get them at a good price. Then when Tesla does it, same thing. Shopify, when it does it, same thing. Wall Street Queen, buy, ask, and sell bid. So what you're doing, ask and bid are basically, the ask is the highest price and the bid is the lowest price. If you want to buy something right away, you put it at the ask price. If you don't want, you think it might go a little bit back, you can put it at bid, or you can put it in between the mean of what bid and ask is. So say bid is at 95 and ask is at 100, and the average is at 98. It's worth 98 or 97. Well, you then put your buy order in. If you want to buy it at that 97 or 98 price, you then put it at 97 or 98 and it should go through. Okay? Sell, same thing. So if you really want to sell it, you can put it at bid, because bid is the lowest price someone wants to, that's what they want to buy it for. it's naturally going to go at the average, which is the median between buy, bid, and ask. So if you're trying to sell it and you want to sell it for $100, but the median is 97 or 98, you're going to have to wait until somebody says, fuck it, I just want to buy it, and they buy it for 100, and they put that order in for 100. Okay? So in general, you're just putting when you're buying, you're going to buy it on ask if you really want it, and sell on bid, like you said, if you really want to sell, like right away. But what I would just do is whatever it is on your home screen, if it's worth X amount on your home screen, just put it at that amount. Put your sell order in or your buy order in at that amount, whatever it said it was. And if it's any higher than that, it will sell it at higher than that because it's a limit. And if you press buy and it's higher than that, then it will buy it. It won't buy it. But if it's lower than what you put to buy it at, it'll buy it at that lower price and save you a little bit of money. Does anyone have, I will answer one more question. I'm going to do this for about 5 more minutes, answer one more question, and then I'm going to head out. Sun's getting rowdy out there. And Logan, did you make your money on that NASDAQ? Oh, you're very welcome. This is what I enjoy doing. So, I'm gonna be here every single Sunday for you guys to go over the strategy and let you guys just ask your questions and get a little bit more practicing, right? So I want to make sure that y'all are good, and y'all are very welcome. Oh, we're gonna make this money, man. We're gonna make this money. There's no doubt about it. And good luck to everybody. If y'all have any questions, feel free to reach out to me on TikTok. If you want to join the Discord, feel free to join. Not promoting it, but feel free to join. We're in there all day, every day, answering questions, doing the live trading. Logan does the live trading. He's a badass motherfucker. So he's even a better teacher than I am. So let's go. If you want to join, take the leap. If you don't, this will be here every single Sunday, and the TikToks will be free every single day. So, yeah. I can try to do that. I'm not going to say yes, and I'm not going to say no, because I do have a lot of stuff going on. I have a few businesses that I own and stuff like that. So I do have a lot going on. There might be some days I can't do that, but I will try. I will try. And if I do it, it'll probably be at the same time like I do these, if I do it. But we'll see. I will try. Okay? I'm not gonna commit or uncommit. Almost, man. It's almost ready. We basically have it. It's all programmed to do what it needs to do, but we're just having some issues with connecting to the brokerages and their APIs. And then for me, I want to make sure that it works like 100% before I release it. Like it does exactly what it needs to do. And the reason why is because I have a connection to the guy who created GoPros, and he's basically said if it works as expected, he will fund a brokerage, and like I will become a brokerage, and this software will be the thing that it trades off of. So I need to make sure that it's 100% good, and that's why it's taking a little time. I am sorry that it's taking a lot of time, but it will be well worth it. I swear on everything I love, it'll be worth it. It'll be worth the wait. And if you invested in it early already, just know that I have you written down, and I did not forget about you, and you will get your login, and you will be good to go when it's here. And again, I'm not going to commit, and I'm not going to uncommit to the 5 minutes or whatever at the end of every trading day. Sometimes I just do not have the time. Even, yes, 5 minutes, but I will try. And if you are interested in the software, just reach out to me. And I will let you know. It's something I'd rather, like I said, the Twitches and the TikToks are for the free content, so I don't want to like muddy it up with stuff that we're I don't want to necessarily talk about stuff that we're paying for or we're offering paid for services, but I can talk to you individually about it. If you want to talk to me about it, here, look, I'm going to post my email in the chat. Just send me an email. I will send you more information about it and like how it works and all that. As a matter of fact, look, I will show you kind of what it's based off of. As you can see, these sell and buy signals basically is where it'll buy and sell either the stock or an options trade. So buy would be a call, sell would be a put. You're going to set your parameters for like how much you're willing to accept a win or a loss at. It'll then buy, it'll sell it at that profit stop or that stop loss. And it's pretty accurate. So that was on the 1 minute. Holy shit. And it was still accurate. Okay, hold on. So this would be a more accurate representation of it. So every single, like this even is a 10%, 20% gain. Even this is a 5 to 10% gain. So I have the recommended settings at like 5 or 10% gains. So this is kind of how it works. But yeah. It does options, yes. It'll do options on TD Ameritrade, and then once we can get Webull, their API kind of sucks. It's not necessarily my fault, but their API just sucks. Webull will trade shares though, so if you want to like have like a small account or a really big account that trades just shares, you can do that and just like net like 0.5%, like get your 0.5%, 1% on shares. That's what I'm doing. It actually on Webull, I actually tested it, and I know for a fact it works. This is how I know it works, and it works well, is because for over 2 or 3 weeks straight, it went 0.5% to 1% on the portfolio, using about 25 to 30% portfolio on each play every day. So 5 days a week, it was going 0.5% to 1% up. So on a week, it was netting about 2.5 to 5% on that portfolio. So it was amazing. It was. I knew I had something when that started going off. So yeah, if you're interested, I posted the my email. Just send me an email, and I will send you more information on it. And if you're still interested, we will make it work. And if you're not, don't worry about it. You'll eventually hear about it, I'm sure, when somebody is using it and they're not having to trade or know anything to trade. So yeah. Yes, exactly. That is how I was netting my 0.5% to 1% a day, was just trading TQQQ and SQQQ shares with the strategy. That's how I have it. So the shares, it only trades those 2 stocks. It's literally set to where it just flips back and forth, based off of this buy and sell signals, obviously, right? So that it always is making you money. Thought on that one. Took some real brain power, guys. But yeah, anyway, I'm gonna go ahead and end this. If you're interested, like I said, just reach out to me in an email, and I will get back to you. If I don't get back with you immediately, it'll be within like 24 hours, man. I will get back with you as soon as I can. And I hope that you guys enjoyed the session today, and I hope you guys learned something. And if you have any questions, that email as well, shoot me a question. I will try and help you out. Set up a one-on-one, anything, guys. Just let me know. I'm here to help you. So y'all have a wonderful night and enjoy. Let's make this money tomorrow. Yeah.